Let's talk about ONGC, and we've got on board with us the CMD of ONGC, Mr. Shashi Shanker, joining in to talk about how their numbers were. Mr. Shanker, morning. Thanks so much for joining in. If you could just highlight what has led to your PAT performance, the fact that it's jumped a good 60% in the quarter gone by.
Yeah, as you might have gone through our press release, talking about the physical performance, our gas production has gone up. Our value-added product also has gone up. There has been some decline in the crude oil production. Despite this, because of the better realization, the crude price was on the higher side, and the rupee depreciation. So all put together, our physical performance, the crude oil price, and the gas and the rupee depreciation put together has resulted into this kind of result.
Could you just quantify what were the realizations like?
If I could just, because I'm right now at my residence, so it's about $73, if I remember correctly, per barrel.
We have seen, Mr. Shankar, the high crude prices, the rupee as well, which seem to have aided your numbers this time around. But your margins have come in a little bit lower than what the street was factoring in at about 51.7%. That's what you've clocked in. Can you just walk us through why the margin performance has been a little bit lower than what the street was expecting? And of course, what is the outlook on your margins going forward?
No, but this is the first time I'm hearing this. In fact, what all I have, by tracking with other people, I have learned that, in fact, it is on the higher side than what was expected. So I don't think all the numbers what we have seen have been on the positive side also. Or operating expenses, everything, yeah.
The challenge for ONGC, some would argue, for the longest time has been that they've not really managed to increase their crude output. And globally also, if I look at your crude output, it has slipped by nearly 2.5% on a sequential basis. So what are the plans in place to boost the output? Because ultimately that is the key to ONGC's future profitability.
No, you raised a very valid question. Let me try and answer this. In fact, in an exploration E&P game, whenever you look for and go for exploration, you are not very sure whether you'll be, at the end of the day, whether you're going to make a discovery in the form of oil or gas. So in the recent years, what has happened, and this is not for ONGC, this is a global phenomenon. Most of the discoveries are in the form of gas. So if you look at the gas numbers, our gas numbers are going up. And projections also going forward, this number is going to go up. From the present level, if you look, we are producing about 24 billion cubic meters. So from this number, these are all committed projects I'm talking about, there is going to be an increase of more than 75% by the year 2022. So from 24, it's going to go up to 42 billion BCM. So that kind of growth you are seeing in gas. And as a country also, if you see, we would like to, because gas percentage, if you see in our energy basket, so it's much lower. And if you're talking about gas-based economy, so this is one. On the oil front, we do have one good discovery, that is in Deepwater, and that is under development. So that Deepwater development on the east coast alone, that's going to contribute about 76,000 barrels a day. That is close to 4 million tons. So that is the time where you'll see some step jump in the production of crude oil.
Okay. Mr. Shankar also wanted to assess if there were any dry well charges and any one-offs in the Q2 performance.
No.
Okay.
I don't think. If you look at the numbers, in fact, we had looked at all the numbers. So it is very much in line with our past performance. So there has not been any increase in dry well charges, or for that, even in terms of rupee crores.
Challenge some would argue for ONGC is that after the HPCL deal, the cash on the balance sheet is limited and restricted, which automatically means that in future, your ability to buy an asset, acquire a global asset is going to be limited. Is my understanding correct?
No. I don't think in any way that has impacted. In fact, if you look at our capex, it has either increased or we have been able to maintain this. Most of the debt what we had or the loan we have taken, majority of that we have been able to pay it back. So, I mean, on the financial front, I don't think that has in any way impacted our capacity to spend on our operational expenses.
All right, Mr. Shankar, appreciate your time and thank you for joining us now.